right now? My next guest is taking a quantum leap to next year and why 2017 is when we'll really see the market lift off. Gradient Investment Senior Portfolio Manager Michael Binger says so. He's here to tell you how to at least capitalize on that for your portfolio. You got a crystal ball? How do you know what's going to happen in 2017?
I don't have a crystal ball, but I can make an educated guess and a forecast just like everyone else does. And I really think that the market, which we always talk about the market this and that, is a bunch of companies, as that's what the market's made up of. And I think those companies are on the cusp of showing year-over-year earnings growth. I think that's going to happen next year, and that's what's going to drive stocks higher.
Okay, so what do you do? Because a lot of people don't have vision that looks that far in advance. Which sectors look to be real opportunities?
Yeah, so I think the past, 6 to 9 months, really it's been the value-driven and it's been the dividend-paying stocks that have really performed well. Kind of these boring stocks, utilities and REITs and companies like that pay strong dividends, the steady eddies. I think that's going to change. They're probably a little overvalued right now, but growth names are not. And when earnings are growing and the economy is doing okay, those stocks type to work. So I think we're going to transition in the next few months from more of a value-based driven market to a growth market.
You know, that absolutely makes sense. But if you believe what Michael Binger is saying, Michael, people are going to say, okay, what's a growth stock from where you sit?
Okay, well, I think a growth stock, you really want two things to make a stock work. You want to have growth, but you want to have valuation that's reasonable or undervalued right now. So I look at both. I think Apple is a great stock to buy right now because it contains both. I think the iPhone 7 is going to be a hit. I think I have a little thesis that Apple, they have every other product cycle as a successful one. iPhone 5 good, iPhone 6 not so good. I think iPhone 7 is going to be good and successful. That stock is ridiculously cheap right now. The investor base is trying to nitpick, production numbers and all that. I think that's just a bunch of busy work. I think when it's all said and done, Apple is very cheaply valued, and it's going to show growth again. You want to own something like that.
Let me just quickly say that Omega Health it has a yield. It's a REIT, but it's got a yield of 7%. So as we look, we've got about a minute left here. Tell me what you think about dividend-paying names. It seems like that's an overcrowded trade right now with just a minute to go before the closing bell rings.
It is an overcrowded trade right now, but Omega Health is not an overcrowded stock right now. It's been a laggard there. Investors are a little worried about it. It yields 7% right now, Liz. So most of these dividend-paying stocks have gone, the prices have gone way up and the yields have gone way down. Not the case with Omega Health. They provide healthcare facilities to skilled nursing and healthcare operators. It's a great stock to buy right now.
Listen, it's up today and we're watching it very closely.